Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. Happy Monday to everyone. This is portfolio update number 140. What I do every Monday morning is I deposit $100 into my taxable M1 stock brokerage account, and that's what we're looking at right now, my Average Joe Dividends portfolio. And we can see the amounts of the portfolio right now is at 274, 486, 87, and this is live, so this will be changing. But we can see over the last year, the portfolio has gone up quite a bit. We started right about 221, and we're down to, well, we're up overall, but now we were up to almost 280,000, but we've kind of retreated back a little bit now to the 274s. We can see the return has been over 24%, and that's including dividends and everything. And the money weighted return is 20.68%. So let's go ahead and we'll jump into the activity log, and we'll see where the $100 went to. But before we get to that, there were 3 dividends that rolled in over the weekend from O Realty Income, Yum, and Avista. So these 3 dividends are going to be dripped right back into those stocks. So we'll see the next dividend of these 3 go up, and then we're going to find out now where the money went to. Since we have these 3 and there's 4 buys, that means the $100 went into one place. And we can see what that is. We'll get to it in just a second. And I'm going to read these off one by one. We're going to see the fractional shares or whole shares that were bought as a result of the dividend drips and the $100 deposit. And first up is Avista and 26.96. This is a dividend drip, so this is not new money. And it bought almost a full share at 0.7356 of a share. And then next up, Yum Brands, another dividend drip, and it bought 0.0526 of a share. So a small fractional share there of Yum Brands, but it will make the next dividend larger. And then O Realty, this is a monthly pair, and 13.23, that was my dividend, being reinvested and bought nearly a quarter share at 0.23933. And then the last one, last but not least, is SCHD. I'm sure most of you are familiar with this. There's tons of videos on SCHD. Every time I do a video on SCHD, it's quite popular. But $100 went into SCHD. And again, what I did was I deposited $100 and I have auto invest on within M1. So the $100 went based upon the allocations. And I'll show you that in just a second after I show you how many shares are purchased of SCHD with $100. And it bought me over 3.5 shares, 3.56253 of SCHD. But since these are purchased after the ex-dividend date, I'm not going to see the higher dividend until March. But it's not going to be a higher dividend because historically SCHD has paid a lower dividend, but I'll have more shares at least to multiply, or higher multiplier at least. It'll soften the blow of the lower Q1 dividend. So let's go back to the portfolio. In this portfolio, it's about 15% of my current net worth, and most of the money in this portfolio is in SCHD, so it's pretty well diversified. I've also picked some other stocks that are not part of that index, SCHD, things like Broadcom or O Realty. Those are not included in there. But I suggest you have a strong foundation of an ETF like a VTI, VU, or the mutual fund VTSAX, something like that. It doesn't have to be from Vanguard, but Vanguard offers pretty low fee mutual funds and ETFs. They're quite popular out there in the financial independence world. So I'll show you how I have this broken up. There's 3 slices within this portfolio. I have it by ETFs. This is the original dividend portfolio that I created. Then I added 12 more later. And I started this, well, let's take a look and see when I actually started this portfolio, just kind of give you a total background. So this is back in 2017. I just kind of started experimenting with M1 and just putting in, a few $100 here and there. And then I started kicking it up. You can see I got to the $6,000 mark here in 2020. And then let's see, I started really accelerating it. You can see right about here, I was at the $30,000 mark, and then I had some equity in a home that I no longer own, and I put that money to work for me into this portfolio, and that's the reason for the big jump there. And then we can see how it's just been climbing ever since, and that money, it's just been snowballing pretty much. The portfolio has. So I just want to walk you through that. If you're curious what's in the portfolio, I'll leave a link below so you can see what's in the slices and all of the companies within in the holdings tab. And we will get into the holdings tab because we're going to have to pull some data from the holdings tab to update the fractional shares of the 4 positions where I bought more fractional shares or whole shares in the case of SCHD. So we're going to go to this Google Docs spreadsheet, and this tracks the 52 positions that are in this portfolio, and I track other things as well, like even my total net worth, and we'll get into that as well. And we can see it has the company, the ticker symbol, the share price using a simple Google Finance function, pulls that price live, and here's the average cost that I purchased. And this is coming from an M1 data tab, but it's going to be coming from this data right here we're going to paste in just a few minutes. Same with the shares. And the values is simple, C column times the E column to get that. Here's my cost basis using the VLOOKUP from the M1 data tab. Here's my gain or loss for each position. Here's my gain or loss expressed in a percentage. Anything above 25% will be in green. Here's the dividends per share. And the quarterly ones are actually, yeah, they're all quarterly except for O Realty and BST. Those are my monthly payers, and they're in blue. Here's the current yield if I were to buy more shares of PNC, for example, 3.21%. Here's the yield on my cost. And this is important because over time, as you're an investor, and especially if the stock price keeps going up and they keep raising their dividend, your yield on cost goes up. So the kind of the power in your money you've invested into the company kind of goes up, so to speak. And here's the pay date. That's how everything is arranged here from the old, or from A to Z pretty much. And you can see November 6th with the PNC. Once they announce their new dividend, 3 months later, I'll update that pay date and then reshuffle the deck, and they'll move down the list. But here's the dividend so far. We are in the dark greens because December is the last month of the 4th quarter. And I have a color key down here so you can identify why I have these 3 different colors. You can see for the first month of the quarter, these are the months, and then the second, and then the third. And then during the 3rd month of the quarter, the March, June, September, December, those pay me the highest dividends because most of the companies in this portfolio do pay on the last month of the quarter. We'll do a quick count up of the dividends. These are dividends I've actually received, with the exception of SCHD. I haven't received that yet, but remember I bought the 3.5 shares. We're going to see the difference in the next dividend. Of course, that's depending on what the next dividend is going to be for Q1 2025. We don't know that. So I'm going to select here the dividends and count them up just so far what we've actually received. And I've received $195.07. But take a look at the dividends I'm expected to receive tomorrow. Since today is the 16th, on the 17th, I'm going to receive these dividends. I've already looked up SCHD. I'll show you that real quick. In M1, you can see once after you're past the X dividend date, you can look up those dividends that you've earned. So SCHD is an ETF slice, and it's right here. I'm going to click on it. Make sure we're at the 1 month view. That should show it right there. We don't want to show all dividends. So here's the dividends earned. So I'm going to receive that 946.15. And then what I'm going to do is I'm going to pull the data from M1. We're going to update the sheet with the new dividends. And then I'm going to check on these too, because you can see these. This is what I'm going to receive tomorrow morning. I'm going to wake up on the 17th. You can see that sum right down there. I'm going to receive $996.09 just for waking up tomorrow morning, and I'll get those dividends. And of course, what I'm going to do is I'm going to drip those back into those stocks. So I'm going to buy quite a few shares of SCHD and then fractionals of the rest of these because the share prices are higher, obviously. So let's grab that data from M1, and what's going to do is it's going to update the next dividend for SCHD, and it's also going to update my monthly cash flow average here. It's going to change the monthly. I hard-coded right here. This is the current, and it's going to change here in the green because of those fractional shares and whole shares of SCHD. It's going to change the dividend next time. So these are going to go up, the monthly, quarterly, and annual. How much we'll see in just a moment. So let's grab some data from M1. We'll go to the holdings tab. Again, I'm going to grab everything from the name column. Oops, did an inadvertent click there. I want to do that. Didn't want to get into the HTML. There we go. Go back down, try this again. Grab everything from the name column. Everything is sorted from the largest to the smallest position within this portfolio. I'm going to click back here because we're going to go back to the portfolio in a little bit after we paste this data. M1 data tab. Paste special, values only. What it's going to do is for the 4 positions where I bought the fractional whole shares, it's going to change those shares, the cost basis, and the average. And I'll show you that in just a second, what it's done. So here were the dividend reinvestments that were done from the 14th. Remember these 3 from OA, Vista, and Yum. It was 13.23, and now the next dividend in March will be 13.31. But in case, let's see, and then O will be that 13.31, and then a Vista, it's going to move from 26.96 to 27.31 in March. But I think it's going to be a little bit more because a Vista usually announces a dividend increase in February. So I think what they'll do is they'll announce that dividend increase, and I'll get that increase of probably 3% on the 27.31 to make it even more. And same thing with Yum, moving from 7.23 to 7.27. You can see even that small 7.23 did make a 4-cent difference. But also check out, last January, Yum Brands did a 10% dividend increase. So if we have the same in 2025, that's potentially like a 72-cent increase. So getting close to that $8 is what my next dividend will likely be in March. And then we can see here SCHD. This, of course, is contingent upon SCHD having the very same 0.2645 dividend in Q1 2025. I don't think they're going to do that. It's going to be probably 22, 23 cents. But if it were, you can see just it moved the needle a little bit with those 3.5 shares, moving from 946.15 to 947.10. But tomorrow I will receive the 946.15 because we purchased SCHD past the X dividend dates. And let's go ahead. We're going to pull the next dividends here actually tomorrow. I'm going to verify these for McDonald's because sometimes I buy things after the X dividend date. We'll check on that and see what these actual dividends are going to be really quickly here. So dividend portfolio, we're going to look up McDonald's real quick. There's McDonald's, and I'll have it in the 1-month view just to make sure it shows the current dividend and not like a cumulative. So 13.93 dividends earned, that matches right here. So I'm going to put this in here. Also what I do is I do a running tally of the dividends. So let's do SCHD 946.15 because that's money in the bank. And then 13.93 with McDonald's. Got that one. So we're going to check 2 more. Let's check on Duke Energy real quick. Go back. We'll find Duke. I know this is a little bit tedious kind of searching through these and then trying to find them in here. Usually I just let the dividends roll in and then just add it in once I receive it. But I just want to show you guys how this works though, and how you can actually check them ahead of time if you want to, rather than just let the dividend roll in. So this one, I'm going to have to go back to 3 months because it said 0. So 14.63, that matches there. So I didn't buy after the X dividend date, so I'll do the plus 14.63. You'll notice it changes. I'll go over here a little bit. Like for Duke, my gain or loss is 27.33%. It's going to go up a little bit with that dividend. You see how it jumped up to 28.45. And then let's do the last one, which is Hershey's. Hershey's has been struggling mightily. So 1065, let's see if that's going to be my next dividend tomorrow. We'll find Hershey's. But I think Hershey's, though, long term, I think it's going to be a good investment. I think it will rebound in time. When? I don't know, but yeah, there we go. 1049. Okay, so this one I did buy a little bit of Hershey's. Looks like after the fact. So I'm going to get 1049 for Hershey's. So we'll do plus 1049. There we go. We got that. Just bumped up Hershey's just a little bit. So I just want to show you guys kind of how that works. We can see now here's the new monthly cash flow from $1,023.24 to $1,023.75. And then the quarterly is moving up from $3,069.72 to $3,071.24. And then the annual from $12,278.88 to $12,284.96. We're going to take the value from the monthly, the $1,023.75. We're going to put that into the monthly average dividend tracking tab. In any event where I buy more shares, I drip more shares, or there's a dividend increase, decrease, or I sell things, it always affects my cash flow average. And the monthly is what I've been tracking in this tab. So we're going to take the $1,023.75. And I already put the event in, which was the deposit and the drips. So we get to the bottom. So we're at 1,023.75. And tomorrow we're going to have a big event. So this is the Yama Vista O dividend drip and $100 deposit. If you want to put in this one, I'll show you kind of how I do it. So I'll put the date, of course. And then it's carrying the new 1,023.75. And this will be and this one will be more significant, especially with SCHD, with that $900+ going to work and buying more shares of SCHD is going to kick up that monthly dividend. And we'll just make sure I've got those right. SCHD, Yum, McDonald's, and Hershey's. Actually, it was not Yum. We already did Yum, so it was Duke. Let's trade out Duke because we've already got Yum in there. There we go. So tomorrow I'll do the very same thing. I'll grab the data. It'll update those stocks here, these four, and then it will change my monthly average dividend along with, of course, the quarterly and annual. Let's move on over to the dividend tracker tab. I've been doing these videos since January 2021. Here is the portfolio value at that time. Here are the dividends paid in January, my first full month of tracking. We'll scroll down to present day, and we're at December right now. We were at 195.07. Let's count in the dividends for tomorrow, and it's going to change it quite a bit. So we're at 1180.27. There we go. You can see we've moved up total dividends close to that $25,000 mark with the portfolio since I've been tracking this. Annual dividends are already ahead of 2023 by over $1,000. See, here's the portfolio value, rounded to the nearest $100. Here's the average monthly dividend. Here's the monthly increase I've done so far. Tomorrow's going to add several dollars to that. And at 21.83, so we've had a month-over-month gain of 2.18% so far. Here's the annual dividend, $12,284.96. Annual increase, $261.92. I've deposited $100, so there's $500 in so far for December. So to close out the video, we're going to go over my total net worth. Like I said, this M1 dividend portfolio, this is about 15% of my total net worth. Let's find out what the rest of it is. And I've been investing for quite a while. So really this money has started since 19 1996 when I kind of started my first real career job. I did a lot of odd jobs and things like that while I was getting my degree in computer science. And I only have a 2-year associate's degree. If you guys are curious, I've done all this on only that. But I do have a 1-year bookkeeping degree as well, since I kind of work in finance a little bit. I work in procurement now. I got out of IT, and I do IT procurement. So if you guys are curious. So here we can see here at Vanguard, I have an IRA, Roth, and also another taxable brokerage account. So over at Vanguard, total of about over $485,000. In this IRA, I contributed with my own money. This is not like a 401k, transfer over to an IRA at all. It was my own money I was doing, and just a traditional IRA. Same with the Roth, and then the taxable, of course, this is after tax money contributed. This is my current employer 401k at T. Rowe, which is all in a Fidelity S&P 500 index fund, just over $100,000. And I've been employed with them since March 2020. So it's going to be going on almost 5 years. And I've got this much there, and I don't even max out my 401k. Now, this is my employment prior from about 1996 to about 2019, right around there. And the value of it is 718,000, and you can see what's in. Most of my net worth is in ETFs, so you can see that. And like VU, VTI, SCHD, and there's more VTI over here. VTSAX. That's the mutual fund version of VTI. Pretty much the same thing. And I have a little bit of international exposure as well. And then here's the dividend portfolio over at M1, right over here. That's that line. And then at M1, I have a 1-year emergency fund and $58,700 there. And here's Synchrony. I have a 6-month emergency fund over there, $27,000. And then over at Capital One, this is a 2-month emergency fund at $12,300. And then you can see the interest rates there as well. And then here's my home value. And here's my liabilities. My credit card, here's the current credit card balance. And it's over $2,000, but it's not due yet. And I pay off my credit cards in full every month, so I don't incur any interest charges. I'm going to probably pay this off, probably right after the first of the year. It's not due, I think, until the 8th or 9th. So plenty good on that. I'll pay that off. Now, that's not the same when I was younger. I did have credit card debt. I did pay interest on it. You bet I did. Also had a small student loan as well, but I fear debt. I don't like debt. But this is debt right here, which is my mortgage. And I will see in 2025, I may just eradicate the whole thing, get rid of it, sell something, like my Vanguard taxable. So you can see you could easily make that problem go away, and then work another year in the corporate world to build up, like the dividend portfolio and even more savings. So that's probably my plan for 2025. So subtracting out the liabilities here, and then of course my assets. I don't count anything else, cars, stupid stuff like that. I don't count it. But here's my total net worth, right about 1.8 million. Here's the breakdown in stocks, home equity, cash, carrying a lot of cash. I think maybe I should just dump it all into the markets, but I don't know. I like to have that cushion there in case something happens. You just never know. Of course, with my luck, I would put everything into the stock market, that I'd lose my job next day, of course, or the stock market would just tank. And then here's the breakdown between pre-tax. The pre-tax, pretty much, this is 401k IRA. Can't technically touch it till I'm 59 and a half. I'm not there yet. But this is my after-tax freedom. This is stuff I can actually get to. And there's something called the middle class trap that most people fall into, where they have everything in their pre-tax or it's in their home equity. And to me, that's a trap, because it's really hard to tap your home equity. You can with the HELOC and things like that, but it gets a lot of people in trouble, in my opinion. See also how it's broken up. I'm a net worth by U.S. and international, very low international exposure. I also track my average monthly dividend once I do have access to the IRAs and the 401k. This is what they're yielding as far as their dividends, as well as the interest from my savings account. So I could draw technically over $3,300 just like that without spending a single share or withdrawing money. It would just be the interest on my cash as well as the dividends. And then here, since November 2022, I was closely monitoring my W-2 income against my expenses and trying to track that gap. And of course, this does not include the dividends from taxable brokerage as well. So I'm actually doing better than this. But what I try to do every month is I try to spend less than my W-2 income. And most months I am successful. And we can see there's been a couple where I had a sick pet and it just wasn't possible, but I was pretty good in November. You can see here, had a really good September, especially in August was huge. There was a bonus in there. So if I have a couple of bad months, December, I think I'm going to be really cutting it close because everything hits me in December. I do a prepaid phone plan. I have to pay for my insurance, of course, Christmas gifts, and it just seems like everything comes in December. But I'm going to try to keep it below the $5,700 mark. We'll see if I can do that. But if I don't, even if I'm 1,000 over, you can see I'm well covered for that. I'm not going to be in bad shape if I have one bad month. And we'll see. I've also got my eye on another drum set. I have two sets. When you hear the music in the intros, outros, my video, that's me and the drums. And I've been in bands for decades, and I gave it up for a while and then kind of came back to it after I was doing drum lessons and kind of realized I still had it. Also went through a divorce, so I had more extra time. So went back into bands, and then I had one drum set at the time, so I had to acquire another one for practice, one for the stage, and I've got my eye on another one. So we'll see. It may blow up my budget in December, along with everything else, but we'll see though. But I think I can handle it. You guys let me know in the comments if you think I should hold off or something like that, but just let me know. So thanks for sticking to the end of the video. Please click the like button if you got value from it. Also subscribe so you don't miss future videos. My next video will be my second half buy of the week. Another $100, but the difference is I pick 5 stocks, and I'm also going to probably do a video either this week or next week. I'm going to do a rebalance of this portfolio, but I'm not going to do it in the traditional way where I can rebalance it through here. What I'm going to do is I'm going to probably kick in $1,000, and what that's going to do is it's going to make sure that the allocations are balanced correctly. We can see we're a little bit underbalanced, or we're underweighted here in the ETFs, but we're balanced here. So I think $1,000 will get us to the 64 and sprinkle some more into these slices. So probably 1,000 at least before the end of the year. I'll probably wait for a day when we have a good drop or something like that. I know it's market timing, but hey, if it can go a little bit further, great. So thanks again, everybody, for sticking to the end of the video. I hope everyone has a great week, and everybody take care.